Welcome to the 2022 Economic Depression and Preparation Channel. I'm your host, Tony. Thank you for joining me on this day after Christmas limited edition. Hope everyone had a Merry Christmas, a Happy Hanukkah, and a Happy Kwanzaa as we begin this year, the end of this year, I should say, the last week of this year, and was able to spend time with family and friends and loved ones and cohorts. But 2022 is coming to an end. Winter is here. Winter is coming. As you know, the travel industry, hospitality industry was affected by the blizzards of the upper Midwest, as well as the Northeast, and cities like Buffalo are pounded by more than 2 feet of snow, blizzard-like conditions, and power outages, rolling blackouts. And many cities in the South were too, as well, with these kind of limited rolling blackouts the last couple of hours. In any event, the housing market has turned icy cold now, ladies and gentlemen. It marks the end of, quote, cheap mortgages, according to NPR.com. Housing market has turned icy cold. As you know, the interest rates have been rising. The average 30-year mortgage is above 6.5%. And then you also have, on top of the 30-year mortgages rising, you also have the fact that the job losses and the raises, no raises have been given in the last, no real wage increases have been given in the last 25 years. So you couple that with the fact, meaning that many families here have been struggling to purchase a new house, a new construction house, a new single family house, a new rancher type house outright in these type of conditions. So now things are cooling. We've had people buying these offers, people offering $20K above asking price, $50K above asking price, whether it was the Blackstones, the BlackRocks, investment groups that were buying up neighborhoods, whether it was individual private investors, whether it was couples selling their homes in hotcake places like in big time places and moving to smaller suburbs. All of that's been put on hold now heading into 2023 because now we have people are in a situation where they're quote unquote stuck, says Lawrence Young, the chief economist with the National Association of Realtors. You have a market that is frozen. You have high prices, high interest rates, and low job growth means that people are now going to be, some people are going to be underwater on their mortgages. Now, many people have made double payments on their houses and paid them off earlier than the 30-year prescribed. Some paid off in 20 years or 15 years, which is great. But now, they're forced to sit on that because they say, well, if I sell my house, where would I go? If I'm leaving California, if I sell my house now, why would I sell my house now and then go to a higher interest rate place in Texas or Florida or Illinois or somewhere where I have to pay double the prices, that you're getting now? So that's interesting. So we have this interesting point now. Now we see that the appreciation is next to go. And also we have the crypto market. The crypto markets have been going down. Remember, Bitcoin was at a high of 60-something thousand just a year ago, and now it's down to less than 14,000, 13,000. The FTX founder, he was a scammer. He's been arrested. This is like the Bernie Madoff of 2022. He's back. He was given a $150 million bail. Imagine that. He bailed out on that. Can you believe that, guys? And so just looking at this, Washington's act now, according to MarketWatch.com, to fill other holes in the Swiss cheese. So now they want more regulation over this crypto economy. But the whole economy, this is ironic because the whole economy, not just the crypto markets, but the bond markets, the derivative markets, the labor market has holes in it bigger than Swiss cheese here. And we all smell a rat, quote unquote, in this proverbial economy. And that's the sad part about it. And this, first of all, the crypto market will be the first to feel the regulation hand of the government. And then later on, it'll be the regular markets, as the Federal Reserve Chairman Jerome Powell is committed to raising these rates up to beat this inflation. Remember, his goal is to get inflation down to 2%. Inflation currently is at 7.5% and holding. So it come down a little bit as you've seen it. You've seen gas prices come down. Average price of natural gas is down to $3.85 a gallon, according to AAA.com. That's for regular unleaded. It's much higher in other parts of the country, but it is coming down. But the gas comes down, but guess what goes up? Your heating bill, your oil bills, your your water bills, your everything else. Homeowners insurance is going triple now. It's going to be going up in 2023. So they lower one area of the economy and they raise up prices and everything else. So you have bills that are increasing, regulations that are increasing as well, not just in the crypto market and FTX, but also in regular markets where if you make over $600 on a PayPal, a Venmo, a Cash App, any of these apps now, you have to save the receipt and print out a 1099 to your employees and all this other stuff. So it's just become crazy out here. The good news is that we've been bought time with the debt market and the derivative market. We have $31.5 trillion of national debt, okay? And we're bought time by printing up more of this dollars, these funny money, this money, that burning up money. So we bought time here for ourselves. But these next 2 years are going to be a little bit more harder than the first 2 years of the Biden administration, because now we've just passed a $1.5 trillion spending bill with bipartisan support in Congress. Oh yeah. So this gives plenty more money to Congress, plenty more money to those in power to use, and just to give us a little bit of crumbs left over like they did last time. Maybe, I don't know if we're getting a $1,400 check, or we may not even get a stimulus check out of this one. But a $1.5 trillion spending bill was passed at 1 a.m. without notifying Republicans. So here we go again. More money spending. We're spending more money that we don't have, in addition to giving Ukraine more money that we don't have, $40 billion. Where is the money coming from? Where is the money going? That's all we would like to know, as economists, as citizens of this country. Where is the money coming from? Where is it going? $1.5 trillion spending money. That's including spending bill, including Ukraine aid. In addition to that, they've also spent money on other things. And remember now, we haven't even gotten through next year yet. We haven't gotten to the summer of next year, where we have other bills that are going to be passing along with immigration, abortion, school bill, education bill. A lot of the teachers in the states have been complaining about their salaries and about the school infrastructure crumbling. So they're going to have to pass a bill for that. The Department of Education. The Department of Transportation wants money to help the infrastructure bill that hadn't really passed. So we've got a number of things on our plate coming in 2023. So imagine the trillions of dollars we're going to spend. This is going to hurt the economy even more, because the more you spend, the more prices are going to go up, and the more the value of your dollar purchasing power goes down. And that's across the board. So we have to be very, very careful and very, very concerned about the amount that Congress is spending. And let me know if you've seen any changes in your property taxes. I have, and in your sales taxes and your gas taxes, all these taxes that are on fees. Let me know if you're getting bills next year in January saying that these are going to be increased, either to quote unquote repair infrastructure or to meet the needs of the citizens. They're going to write a letter to you. Let me know what you're seeing in your area. I'm seeing that in my area, in the Southeast, in the Northeast, as well as in the Midwest, as about these bills coming up, and everything else is going up except the American people's paycheck and the American people's desire to help one another. So let me know what you think in the comments below. This is a shortened version for today because it's the day after Christmas. Enjoy the rest of your time. If you're off this week, heading toward the New Year's, and God bless you guys, and I'll talk to you very soon again. Thank you.